I want to share with you the best business model I have seen for mortgage brokers in my 18 years in the business. And personally, I've looked under the hood of a lot of mortgage brokers over the past decade in particular. And hands down, this is the absolute best because it can be replicated by almost anyone. The problem I see sometimes is there's people that have a particular network or they have an opportunity or maybe a set of skills that's very hard for other people to copy. What I'm going to share you today is absolutely copyable. And man, I'm going to break this down for you in detail. So I'm going to talk about why in this particular model, the market is not actually the problem. It's the business model. I'm going to talk about why the order that you should build this in, and also why you don't need to be a master at sales to do it. So like, this sounds like a far-fetched thing. I'm telling you, when I saw this for the first time, I was literally blown away. And if you stick around to the end, I'll share with you how you can find out about going much deeper. Hey, I'm Scott Beckford. This is the I Love Mortgage Brokering podcast. And every week I create a solo show. And in it, I share tactics and strategies with the idea of helping your mortgage business. I'm the founder of this as well as Bricks Mortgage, BRX. And over the last decade, I've worked and coached some of the top brokers in the country. And I just want to share some of that stuff with you guys. And hopefully it helps you. Let's jump right in. All right. So I'm going to tell you first about a quick case study of where I saw this and then give you some numbers and stats and break down for you like why it's for some of you, you're going to be like, Scott, this was so simple. But you're probably off by, I know most people are off by a couple degrees. And because of it, they actually don't get anywhere near the outcome out of it that they could otherwise get. So a friend of mine, Wally Library, who's a loan officer down in Dallas, Texas, and fantastic guy. And so he tells a story about how when he was like, I think it was 2012, he was speaking on Todd Duncan's stage and he was doing about 40 million a year. And everybody was like, you're amazing. You're a fantastic guy. And he was like, I was working like crazy. I had no time. And he knew something had to change. And so over the next, 7 or 8 years, he learned how to use, instead of being a salesperson, he learned how to build a system that could sell. That's a key takeaway I want you to take from this. And so 2019 did 100 million with 2,000 clients. 2023, 311 million, 28,000 clients that he markets on a monthly basis. I'll break this more down for you in a minute here. But that which is cool, right? So he tripled. But here's the thing. 2020 was 150 million. 2021 was 247. 2022 is 270. He kept going up. Most mortgage brokers actually had volume, loan officers, their volume went down. Like everybody saw a big surge. It was like this massive, that we saw during COVID and everybody dropped. He did not drop. And it's like, so then the question is like, if you see something like that, I'm asking, what did you do different? Because he was in the same market as everyone else. And what he did was he built what he calls a 6-lane highway. And it's the idea that you as the mortgage broker are the center of this. Imagine if there's all cities lead to Rome, all referral partners lead to you and you push them back out. And so I'll break this down for you in more detail. So essentially what he's done is he's built partnerships with obviously real estate agents, with his past client database, with his financial planners, accountants, CPAs, and he markets to his database and theirs on a monthly basis. And he generates referrals for him and his partner. So he's like the key partner in the center of this whole thing. And it works like a hot damn. Now, most of you probably think, Scott, that's not that big of a deal. We all should do that, right? Yeah, but there's probably a few things you're missing. The first I would say that most people forget or they miss is they don't actually measure it. So they don't know. So some of you, and you may be giving more or less referrals out than you think, but if you don't measure it, you don't know. And so he measures the output of this whole system. So that's the first thing you got to measure. The second thing that he does is that when most mortgage brokers are terrible at marketing their database, like absolutely terrible. Realtors are worse, and a lot of business owners aren't. And it makes sense really because somebody's done a transaction with you as a mortgage broker. They don't need you in a lot of cases for a while, and so what are you going to send them? You're going to send them recipes and you try to stay top of mind in case they think of you, but it's pretty passive for most people if they're doing anything at all. With the Wally's difference is that he's actually marketing to his database to find referrals for his partners. So he's thinking this whole idea of giver's gain. And there's a great quote, one of my favorite quotes from Zig Ziglar. You can have anything in life you want if you help enough other people get what they want. He understands this. And he's like, okay, but here's the thing about being a giver. There are people who are straight up takers. And if you don't have a plan for that, this will not work. And so I'll explain that to you too. So basically what he does is instead of marketing to his database for more mortgage clients, initially what he's doing is he's looking for people for his realtors, for his CPAs, for his accountants, for his lawyer, for his insurance person. And I was just chatting with him, and he averages about 100 outbound referrals a month currently. So he's pushing about 100 qualified referrals a month to his partners, and which means he's putting money in their jeans, which is like, great, that's awesome, Scott. I probably do that. You probably don't measure it. What if you do? Good for you if you do measure it. But here's where the miss happens is that you hand out these referrals, and especially I'm speaking to my Canadian mortgage broker friends here because we're so polite. we actually don't have a business conversation with this referral partner. And we've sent them this, and I've talked to people that have sent tons of business out, and they're like, I don't really get that much back, Scott. And it's because you didn't have a business conversation and you didn't set expectations. And so because you don't have that business conversation, you don't set expectations, what happens is that they take from you and you don't measure, you help them and they don't help you in the same way. And so what ends up happening is that you end up giving this out. You're like, it's not really working. Why am I doing this? And now I'm just going to go, instead of doing this, helping build your referral partners business, what you do is you go out and you find a new shiny object. I've done this myself, so I'm speaking from experience. I'm going to do cash damming. I'm going to do this type of niche thing. And you're constantly switching between these different market strategies that don't have a long-term plan. They're available today, but that's not building a business, right? And you won't grow when the market fluctuates, which it's going to. It will, it has, and it will again. You will not be able to grow through those fluctuations because you're too dependent on a few of those referral partners, whether it's all real estate business, or you saw in the US back in when the rates were low, there were mortgage shops that were doing 95% refi. The rates went up and they went into business. They just got shut down. They got slaughtered because they were focusing on a tactic instead of a strategy. And the tactic is, how do I get business from this person today? The strategy is, how do I build something that's valuable and is over the long run? And so if you do this right, you're doing strategy over tactics, and you still need to apply the tactics. So, okay, so that's the thing I see. So a couple of quick things there. First is that you need to think about your database as a way, especially for people that you've closed transactions with. It is where you find business for your partners. And then you have a business conversation with your partners. It's not just, hey, I'm going to send you some referrals, refer me back. Yeah, I will for sure. No problem, Scott. Love you, man. Absolutely. You sit down with them once a month. Wally does this. He sits down with his referral partners. Hey, if your name's Kevin, hey, Kevin, looks like we sent you 9 referrals last month. How did they go? Oh, man, you know what? I closed 4 of them. Awesome. That's fantastic. I've noticed that we're not getting referrals back from you, though. Like, what is it like? How can we make this relationship work? So here's what ends up happening. So most people, all of his partners, they're not very good at generating referrals, right? They're not. So then what ends up happening is they say, well, Wally, man, I can't give you much business. Wally's like, okay, look, give me your database of clients and homeowners, and I will actually market to them for both of us. So what ends up happening is you start giving out these referrals. You've had the business conversation. And if they won't refer back, if they're a straight up taker, you will have to replace them. But don't worry, you will have 100 people that will come back to you. You'll have a lineup of people that want to work with you if you set this up properly. So what will happen is that you'll end up having that business conversation. They're going to not be able to refer back as well as you because they don't have a system. They're trying to do it ad hoc, and you need a system to do it. And so then they give you their database, and then you market to that database. But here's the thing: you find mortgage clients in their database, but guess what else you find? You find realtor clients, you find financial planner clients, you find accountant. The whole thing, it's got this exponential factor to it that is absolutely incredible. And so when I saw this, I was like, oh my gosh, no wonder your business grew when everybody else was slaughtered by when the rates went up and everything just stalled. Everyone else saw a big 30-40% drop. 30% drop was pretty normal. He grew. Like, how do you do that? Like that's like an outlier. And then you have to always ask, like, what did you do different? And what he did different is that he did not rely on just real estate agents. He had a network of people, a database that he was marketing to. And then that was driving more business in for all partners. So then imagine, okay, so you've got Kevin, your financial planner, and Kevin's not very good at sending you referrals, but you're sending him referrals and you're measuring them. Then he gives you his database. Now you're marketing his database. And out of that database comes clients for you, clients for your insurance agent or your lawyer. So now you go to your lawyer. Hey, Mr. Lawyer, I got you this many clients. Oh yeah, man, and one of the great conversations that you have with these people is you say, hey, Kevin, just out of curiosity, who's your number one referral partner last year? How many referrals did they give you? In most cases, the number is not that high. It's like, oh, I got somebody who sent me 6. Awesome. My goal is to be your number one referral partner. And because I want to make sure that we do lots of business together. Awesome. So I know you told me 6. We're gonna blow that out of the water. When you do this, it's all about leading with value. When you lead with value, these people will not be referring out anybody else. They're going to want to work with you because you are adding so much value to everyone else's business that it would be a major detriment for them to not continue to work with you, right? But here's the problem: is that often on the other side, they're not probably measuring it either. So they're in their 9 to 5 doing their thing. If they're an insurance agent or they're a lawyer, and the referrals are coming in, and they're grateful. They would say they're grateful. They don't measure it either. So if you don't measure it, they're not going to measure it. And then you can't have that conversation to say, hey, how can we make this equitable? And that conversation comes into, hey, look, I got a solution. You go from the financial planner, now you're over to the lawyer. Hey, why don't you give me your database? I'm really good at doing this, and I'll generate business for both of us. Awesome. Let's do it. Now you're marketing to their database and you grow your database. So just to give you like the proof is in the pudding, what Wally did with this. So in 2019, he marketed on a monthly basis. He had 2,000 past clients. And today it's over 28,000, 33,000 by the end of this year, homeowners that he's marketing to on a monthly basis. And so like, how the heck does he do all that? How, like what? And he's not even doing it. So here's the craziest part. So his business has gone up. He's over 300 million. He works 24 hours a week in his mortgage business, and he takes 5 months off a year. So he calls it 24/7, 24 hours a week, 7 months of the year, and has a fantastic work-life balance and built out a team. Because he is not doing the sales, he built a system that was replicatable and added so much value to everybody's part. Like the partners don't care if it's Wally doing the mortgage or Wally's person, because it's like, we're both making money here. We're both winning. So there is no downside to this. So you can imagine you set this thing up properly. The leverage that you get on this is insane. So a couple of the things are, as I said, though, where people make mistakes is they don't measure the thing. They don't have a business conversation, and they assume their partners are going to take care of them. And they don't, because they're just busy and they don't even know. But when you have that conversation and you hold them accountable, you will absolutely not only get referrals from them, but you'll also get their database, because the database is where the money's at. And then you set up that system to do it. So if you're like, well, what kind of system does he use? What is he doing the reach out for? I'm going to be doing a webinar on November 20th. And so I'll be breaking down for you this business model in a lot more detail. And so if you're interested in finding that, if you click on this show, there's going to be a link to where you can register. Come check it out. I'm telling you, man, this is like, if I would have known, so I sold my mortgage business back in 2018 because I was spending so much time coaching, and which was a good deal for me. I've talked about it in other episodes, but if I would have known this was possible, I never would have sold it. I would have done this, and it would have just been like, why didn't I? The reality is I A, didn't know it was possible. B, didn't realize that I was like, as much as none of this stuff sounds revolutionary, but it's all in how you set it up. It's like the order matters a lot. And then the other thing, one thing I'd say too, is that people, where they make mistakes on this is that they will, mortgage brokers, and I've done again, I've done this too, is that they focus on too many things at once. And so one of the things Wally does, which I think is brilliant, is every October he makes a commitment to what's the weakest part of his business and he's going to make it strongest that year. So at one point, 3% of his business came from past clients. Now, as in the US, it's fairly common. It's more common because, again, mortgage terms are longer. And so people are like, well, I'm not going to need me for 8 years. Who freaking cares unless rates go down? But he's like, so he made a conscious effort and changed it from 3% to 35% by really focusing on past client business and past client referrals. And so if you've got the realtor thing down and maybe you don't have the insurance, then just focus on it for a year. Just give it 1 year and be like, I'm going to make this so good that your business will do better, rather than like 10 things or changing up or chasing after a particular niche client that you may or may not be even work in 6 months or 12 months. Like, forget that crap. Just build a proper business, not something where you're just chasing this next crazy thing. So if you're interested in that, go check that out. Click on this podcast episode, and I'll see you on that webinar. But man, I got to tell you, I wish I would have known this. But I guess in that time, he hadn't actually built this all out by then, because that was 2018, and he started this really in 2019 in earnest. So anyways, hey, I'm Scott Packford. Thanks again for listening. This is the I Love Mortgage Brokering podcast. And as I always say, there's no problem in your mortgage business that someone else hasn't already solved. Your problem is who's got the answer. Hopefully this podcast provides some of those answers. Thanks for listening, and I will see you on the next episode.